In my previous S&P 500 weekly technical analysis, I have mentioned that irrespective of anything, the S&P 500 will fail in the 698X, and even if it moves beyond 698X to the 7000, then also it will come down and it will fail, and then it can enter into the short-term bearish cycle. So why S&P 500 was supposed to fail in the 698X? This was because of the presence of a small zone. This zone is through my calculated levels. So what we have seen here, that the all-time high of the S&P 500 on Monday was 6986. On Tuesday also it tried to move up, but it failed at 6985. That is why repeatedly in my updates, daily updates, I mentioned that the S&P 500 has failed. Why? Because the S&P 500 was supposed to fail at the zone, and it did. And because it has failed at the zone, this means that any bullish side movement will be limited to the 698X zone only, and this will be the bullish limit. That's it. So a failure from the 698X zone, it was not a surprise. It was supposed to happen, and it happened. Now the other thing that I mentioned in my previous S&P 500 weekly technical analysis is the repeated fall. Before the S&P 500 can even hit the 7000, we will see repeated falls. And when it sustains, after the fall, when it sustains, then only it will come into a strong bullish condition to try for the 7000. But for that, the only condition is the 695X. All daily closings must be above my calculated level 695X. Otherwise, 7000 will not happen. And for the 695X to happen, the S&P 500 must sustain at or above the small support zone in the 691X. This is why if you see that on Wednesday, S&P 500 came down heavily. It breached the 6900, entered into the 6800, but retraced and closed above the 691X at 6926. That is why in my updates here, I mentioned that there will be the repeated recovery of the 691X zone, even though there is very heavy fall, but still we will see repeated recovery of the 691X zone, because the obligation to the 691X must be fulfilled. And why there was this much of heavy fall on Wednesday? Because the Dow Jones lost its critical level of 49,225. This was very critical, very heavy level for the Dow Jones. However, then on Thursday and Friday, we have seen the mixed reaction in the market. S&P 500 failed to hold, came down, failed to hold at what? Failed to hold at 695X level. This was the problem. However, the good thing is that on Friday, the S&P 500 managed to sustain and managed to hold and close above the 691X zone. Why? Again, because the Dow Jones did not lose the 49,225 level on Friday. Now, how exactly the S&P 500 is expected to trade in the next week, in the coming week? What will be the bullish condition? What will be the bearish condition? So I'm going to cover all of this in detail in this S&P 500 weekly technical analysis, which is for the week of January 20th. Why? Because January 19th is the holiday. Monday is the holiday. So the first trading session will be on January 20th, Tuesday. So for the week of January 20th, means from January 20th, which is Tuesday, to January 23rd, that will be Friday. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. In the first part, I will do the technical analysis, okay, based on the technical indicators and everything, the candles and these things, the technicals on the weekly chart and the daily chart. And in the second part, yes, one more thing. In the technical analysis, I will show you that on the daily chart now there is a problem, because now there is a visible bearish pressure on the market. Okay. The second part is the probable movement. In the probable movement section, I will tell you that how we are expecting S&P 500 to trade in the next week. Okay. So just like in the previous week, I mentioned that 698X, there will be a fall. Okay. Then there will be the bearish support levels. Okay. Once it holds, then there will be recovery. Similarly, I will tell you that what we are expecting to happen in the S&P 500, Dow Jones, and in a manner in the entire market in the next week. What will be the bullish condition, bearish condition, bullish levels, zones, bearish levels, etc. in the probable movement section. So first I am going to begin with the technical part. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500 and the Dow Jones and in a manner to the entire market, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So guys, now I'm going to discuss the first part. This is the weekly chart. So I've divided the technical part into two sections, weekly chart and the daily chart. First, I will cover the weekly chart, then I will cover the daily chart. Okay. So this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay. Now, let's first discuss the candle. So if you look into the candle, it looks like a spindle. Spindle generally means a reversal. Okay. If it forms at the bottom, then it will show a reversal in the bull side. If it forms here at the top, then it indicates the bearish side movement. Okay. As per the candle, okay, there is a very small body, very thin body, but however, the kind of candle it is indicating an initial or intraday bearish movement on Monday, but is not indicating a gap down open. Just an initial or intraday bearish movement on Monday. That's it. Okay. Now let's analyze the chart of the Dow Jones just to verify whether means whatever we are expecting to happen in the S&P 500 will actually happen or not. This is the candle of the Dow Jones. Now here, this is very limited bearish candle. Secondly, the previous candle is a very heavy bullish candle. And compared to this, the previous, the weekly candle of the Dow Jones, this candle is very small, very limited bearish candle. So it is indicating neutral sentiments, neither bullish nor bearish as per the movement of the market, as per the open of the market, it will be seen. Secondly, this is the weekly chart. Okay, neutral sentiments means that whatever the daily chart will indicate, okay, will be followed on Monday. Okay, and then on the subsequent days. So now in general, what we can see here is that the candles are indicating that there will be an initial or intraday bearish movement on Tuesday, not Monday, because Monday is the holiday. Okay, so on Tuesday, first session, okay, so there will be the initial or intraday bearish movement. Now let's analyze the technical indicators. Well, in terms of the technical indicators, okay, weekly chart, there is not much change. So S&P 500 is bullish through the moving averages, Bollinger Bands and the Ichimoku cloud on the weekly chart. S&P 500 is bearish through the MACD on the weekly chart, and S&P 500 is marginally bullish through the stochastic RSI on the weekly chart. And if the situation does not improve, and if there comes any kind of red candle or limited green candle, then in the next week the stochastic RSI will turn bearish, and then the 7,000 will be delayed. Means if the 7,000 is not achieved, okay, in the next week, and there comes the red candle or limited green candle, then this 7,000 will further be delayed. Okay, then we will see first, okay, fall in the market for 2 or 3 weeks, then a recovery, and then only the 7,000. Okay. So as per all of these, the technical indicators, okay, the S&P 500 is still holding at 80% bullish. The fear of fall, the fear of sudden fall is there. Why? Because the MACD is trading bearish on the weekly chart. Okay, fine. Now let's analyze the Dow Jones. Dow Jones is bullish through the Bollinger Bands, through the Ichimoku cloud, through the moving averages on the weekly chart, and the Dow Jones is bullish through the MACD and is also bullish through the stochastic RSI on the weekly chart. So Dow Jones is 100% absolute bullish, but the same condition here. If there comes a red candle or limited green candle in the next week, the weekly chart, I'm saying the weekly candle, then the stochastic RSI will turn bearish in the Dow Jones. Okay, in that case, the indices on the weekly chart, okay, will show weakness in a manner that we will see fall for 1 to 2 weeks or 2 to 3 weeks maximum. That's it, and then only a recovery, and then the S&P 500 can try for the 7,000. Otherwise not. Now there is one more thing, that the 7,000 is getting delayed. There is a delay in achieving the 7,000. Okay, S&P 500 on 27th of October hit the all-time high 6920.34. Okay, Then from 27th of October, now it's been almost 2.5 months. Okay, and it's going to be like 3 months. It's been almost 3 months, and S&P 500 has failed to move from 6920 to 7,000, just 1.2% approx. It has failed again and again. It tried but failed, tried, failed. Okay, so there is a delay in the 7,000. This means that this is the next week. This is a good opportunity for the market to hit the 7,000, because if the market fails to hit the 7,000 in the coming week, in that case there will be more delay. Why? Because the technicals will then trigger the fall. Okay, technicals will then demand a fall first and then only the recovery, right? But how soon we are expecting the fall, okay, or if we still there is the room in the bull side, so that will be more clear through the daily chart. So let's move on to the daily chart. So guys, this is the daily chart. Okay, DS in daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. Okay, so guys, before I discuss the daily chart, so far if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get the daily precise updates every day from Monday through Friday, then you can join my Patreon community. Now this is the daily chart, and daily chart means one candle represents one day, not 1 week or 1 hour. Now let's first analyze the last daily candle. Okay, it's a good bearish candle. The closing of the candle is below the closing of the previous candle. Okay, secondly, the only bullish thing in this candle is that it managed to hold and sustain and to close above the red moving average. Okay, this is the only thing that is supporting the S&P 500, okay, on the daily chart. So the candle is indicating an initial or intraday bearish movement on Tuesday. Okay, but a gap down open cannot be confirmed. Now let's analyze the last candle of the Dow Jones. This is the last daily candle of the Dow Jones. Okay, it's a limited bearish candle and is not heavy as the candle of the S&P 500 is. So this candle is also indicating some bearishness, but that is to be limited. Okay, so an initial or intraday bearish movement on Monday, that's it. Okay, no gap down open or nothing. So now it's clear that through the weekly chart and through the daily chart, the gap down open is not confirmed, but there will be an initial or intraday bearish movement on Tuesday. Okay, Tuesday, because Monday is the holiday. So it is clear. Now let's analyze the technical indicators. Okay, so for the S&P 500, technically, because the closings are still above the moving averages, there is a clear fan out in the moving averages on the daily chart. So S&P 500 is bullish through the moving averages and the Ichimoku cloud and the Bollinger Bands on the daily chart, but the S&P 500 is now bearish through the MACD and is bearish through the stochastic RSI on the daily chart. This means that now there is the bearish pressure on the S&P 500, and the S&P 500 is only 60% bullish on the daily chart. And remember what I mentioned for the weekly chart: if there comes limited green candle or any kind of red candle, then most likely the stochastic RSI on the weekly chart will change to bearish. Okay, when that happens, then the weekly chart will also go 60% bullish only. Means there will be more pressure on the market, on the entire market. And now let's see the technical indicators of the Dow Jones. So the Dow Jones is actually bullish through the moving averages, through the Bollinger Bands, through the Ichimoku cloud on the daily chart. And the Dow Jones is marginally bullish through the MACD, but is bearish through the stochastic RSI on the daily chart. Okay, very dicey situation for the Dow Jones. However, Dow Jones is more bullish in this manner as compared to the S&P 500. So Dow Jones is 80% bullish on the daily chart. So this means that overall the situation is that market is still bullish. In the long term, it is still bullish. In the short term also, it is still bullish. Okay. However, if the things don't change, things don't improve in the next week, especially on the first day, January 20th, Tuesday, in that case, we will see the fall in the market. Fall in the market because the technicals will then change to bearish, and because of this bearish change, we will see pressure on the market, and then we will see fall. However, this fall is expected to be limited and is not expected to be heavy. Why? because as of now S&P 500 is holding and all of the closings are still above 691x. And in my daily updates every day I have repeatedly mentioned 691x is very important, okay, whether the S&P 500 is going bullish or if it is trying to go bearish. So now this picture will be more clear in the next part, that is the probable movement. But guys, before I discuss the probable movement section, I have this information to share with you, that if you also want to get these daily precise updates which I give to my Patreon community members every day from Monday through Friday, as well as opportunities in the premium stocks, ETFs and crypto, okay, 5050 to 8080 every month, 50 to 80 premium opportunities, and also the S&P 500 mid-week update, which is generally given every Wednesday, and it is a video technical analysis with precise levels, precise numbers and everything. So if you want to get all of these, the daily precise updates, the opportunities in the premium stocks and the ETFs, and also the mid-week update video technical analysis, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page, this is my Patreon profile, and here you will see this button which says membership options. And when you click on this button which says membership options, then you will see that there are these three levels or these three tiers. Level 1 and level 2 are same, the only difference is the geographical location. And level 3 is the premium level, because in this level whatever you are going to get here, by default you will get here. Along with that you will get the premium opportunities in the stocks, ETFs, crypto every month, 50 to 80, 50 to 80. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates and also the opportunities in the premium stocks and also the midweek update video technical analysis. So guys, whenever you want to join my Patreon community in order to get all of these, then I have given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the second part of the agenda. This is the second part, is the probable movement. Probable movement means what is expected to happen in the S&P 500, in the Dow Jones, in the Nasdaq, and in this manner in the entire US stock market. Okay, what is expected to happen in the coming week, the week of January 20th, because January 19th is the holiday. Okay, so January 20th is Tuesday. So from January 20th, which is Tuesday, to January 23rd, Friday, okay, whatever is expected to happen in the market, I am going to discuss here in this, the probable movement section. Now, first thing first, next week on Thursday, the PCE and the core PCE, the inflation data will be released. This is the only biggest news for the next Thursday. Okay, Wednesday, I think the GDP data, okay, quarterly GDP data will be released. However, this will not impact the movement of the market much, because the PCE data is scheduled to be released on Thursday, okay, on January 22nd. So this will be the most important news for the next week before the FOMC. Okay, other than that, in terms of the earnings, okay, no significant earnings for the next week. This means that on Thursday will be the only day when the inflation data will be released, and this will be the only day that can actually trigger the heavy bullishness or the heavy bearishness in the market. Now let's talk about the numbers, levels and zones. Well, what we know is that so far that the S&P 500, that the MACD of the S&P 500 is bearish on the daily chart. MACD of the S&P 500 is stochastic RSI of the S&P 500 is bearish on the daily chart. This means this combination is indicating bearish momentum on in the S&P 500. Okay, in case of the Dow Jones, the MACD is almost at the junction wherein if there comes limited green candle or any kind of red candle, then on Tuesday we will see the change in the technicals in the Dow Jones, okay, on the daily chart. Once this is aligned, that the S&P 500, these two indicators for the S&P 500 and the Dow Jones are bearish, this means that for now there will be the fall before it can actually try and hit the 7,000. So 7,000 will be delayed. there will be the delay in the 7,000. Question is that when it comes down, that then to what level this will be coming down, the S&P 500, to what level it will be coming down? It will be coming down to the 685x, 684x, 5x. And the same thing, the 685x, okay, this a fear of a fall to the 685x is not out of the picture. Okay, this is what I have repeatedly mentioned since Wednesday to my Patreon community members, that there are now the technical conditions, okay, which are indicating that S&P 500 will struggle to move to 7,000, and we cannot see 7,000, okay, as of now. Rather, we will see more fall, okay, and the fear of a fall to the 685x is not out of the picture. It's still there. So this means that if the market remains bearish, remains weak, okay, in that case 685x will be the target that it will be looking for. Okay, it can breach a little the 685x, that's not a problem, but because of the presence of the moving average on the weekly chart and on the daily chart and on the 4-hourly chart around the 685x, this 685x will be heavy support for the S&P 500 in the bearish side. Okay, so this, and what will trigger the fall to the 685x? Again, the 691x, the zone in the 691x will decide whether or how soon there will be the fall to the 685x. Okay, why? Again, the 691x is very, very important, you know that. This is why I have repeatedly mentioned 691x again and again every day, not just one day, okay, but every day, that the 691x is there, and that 691x will decide the bullish and the bearish side. Okay, below the 691x, the daily closings, okay, will trigger the fall to the 685x. In between these two, there is a level, okay, very strong support at that level. Okay, and S&P 500 is still in a condition to hold and sustain at that level and to bounce back and to recover the 691x rather than to coming down the 685x. Okay, however, when there comes continuous daily closings below 691x, then there will be heavy chances that this level in between 691x and 685x won't be able to hold for long, for more than 3 or 4 hours, and then eventually it will have to give up. Okay, and then intraday we can see that it is coming down to hit the 685x and then to recover. Now, other than 691x, okay, there is one more important thing here, and that is not actually in the S&P 500 but is in the Dow Jones. Okay, what is that? It is 49,225. This is my calculated level. Okay, 49,225, and the 49,225, okay, is in sync with the 691x in the S&P 500. So as long as both of the indices are holding, sustaining and giving closings above these levels, S&P 500 is giving closings above 691x and the Dow Jones is giving closings above 49,225. Okay, the entire market will remain sustainable no matter what. That is why on Friday, okay, here in the midday update, I mentioned that because the Dow Jones did not lose its heavy support 49,225, okay, and is holding above, this means that the S&P 500 is going to hold above the 691x. Okay, any fall or the bearish side will remain limited to the 691x because the Dow Jones is holding and sustaining above this. But remember, the constituents of the Dow Jones and the constituents of the S&P 500 are different. Okay, movement in both of these indices differ by at least half a percentage, okay, 0.5% or 0.7%. This means that if this goes out of sync, okay, then in that case we need to be careful, very, very careful, and to see, okay, what is happening to the 49,225 and what is happening to the S&P 500. If not the 691x, okay, then the level between the 691x and 685x, what is happening to that level? If it is in the bull side, okay, so yes, so let's discuss the bull side. But guys, before that, so far if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. So for the bull side to happen, the 691x, okay, 691x is there in the S&P 500, and then the support from the Dow Jones 49,225. Okay, now above 691x, what comes into the picture is the 695x. Okay, now this 695x is very important for the 7000 to happen, because if there comes no continuous closings above the 695x, then 7000 will not happen. Okay, it will not happen. Okay, or it will be delayed, or it will not happen at all, right? So 695x is important, that comes after the 691x. Okay, now if that Dow Jones has lost the 49225, but the S&P 500 is holding in between these two, then also it is sustainable. If the Dow Jones is holding at or above 49225, but the S&P 500 has lost the 691x, okay, then the level in between 691x and 685x. Okay, now there is one more thing, there is a level in between 691x and 695x. So this level was earlier weak, but now this level is heavily supported by the moving averages. That is why this level in between the 695x and 691x is very heavy in a manner that any kind of fall, it can actually hold and absorb the bearishness and can hold the fall, can help the S&P 500 to retrace back and to recover the 695x. Okay, and once this level is lost, in that case most likely the S&P 500 will lose the 691x also, because this level is now more strong as compared to the 691x. So once it's gone, then most likely the S&P 500 will lose the 691x, and then most likely the Dow Jones will also lose the 49225. And once all of this happens, then that will be the bearish case and not the bullish case. Okay, so as long as S&P 500 is holding, sustaining, okay, at or above this level, giving closings above this level, it is fine. Okay, that's not a problem. Okay, otherwise there will be the bearish case. Now there is one more thing, that because of the pattern, there is a pattern in the S&P 500. Okay, this pattern is indicating, especially after getting rejection from the 698x zone, after getting the rejection from the 698x zone, not one but two, on Monday and then on Tuesday, two consecutive rejections, S&P 500 has formed a pattern. Okay, and this pattern is indicating more fall, okay, rather than the bullish movement. Okay, or first the fall and then the recovery, first the fall and then only the recovery. This pattern is indicating that. This means that now the level that I have mentioned, okay, this level will be heavily tested. Okay, and then the 691x will be heavily tested. And Tuesday will be the first working day. So on Tuesday this picture will be very much clear. Okay, how if the S&P 500 is going to hold and sustain and to give closing above this level or not. And if it does, okay, the zone and the level, if it does, in that case the bearish side will be countered, will be cancelled, okay, through this the bullishness. Remember, next week is a short week. Okay, Tuesday, Wednesday, Thursday, Friday. Generally whenever there is a case of the short week, okay, 3 days or 4 days within a week, then generally, not always, like 80% of the time, 70 to 80% of the times, okay, this indicates by default bullishness. This means that in the next week, because Monday is the holiday, okay, this means that the next week will get by default bullishness. Bullishness will be there in the market by default. Okay, but whether this bullishness will be able to help the S&P 500, Dow Jones or not, this will be very much clear on Tuesday itself. Okay, in the first half, especially after open and then the initial movement. So in the first update I will mention, okay, where we are expecting the market to like bullish, okay, or the bearish side, and then by the time I give the midday update, picture will be very much clear, and then the final update, okay, for the rest of the week it will be clear that whether the rest of the week on Wednesday, Thursday, Friday will be bullish or bearish. Okay, so if you have subscribed to my YouTube channel, then I think it was the last week or last week, okay, I mentioned that because of there was a condition, because if that condition is fulfilled, then what will happen? If that condition is fulfilled, this was the condition, if this condition is fulfilled, then for the rest of the week it will remain bullish. That's it. And we have seen that Monday, Tuesday, Wednesday, Thursday, Friday, it was the bullish week. Okay, repeatedly I mentioned from the Tuesday onwards in this week, okay, that it will be the bullish week, to my Patreon community members, that it will be the bullish week. Okay, so this means that bearish side is open bearish side is open to 685x. Okay, 685x to fulfill the obligation. Okay, whether there will be a hit to the 685x or not will be defined by the 691x, the zone. Okay, how soon the S&P 500 will lose the 691x, this will be defined by a level which is very strong and is in between 695x and 691x. This level will define how soon it can lose the 691x and can trigger a fall to this, or if it will not lose and will recover and will give the bullish movement. Okay, and 49225 in the Dow Jones. Okay, this number I have disclosed here for the first time. Okay, in the Dow Jones, 49225. Okay, will further help us to understand whether the entire market is going to sustain bullish or bearish. What about 7000? Okay, where is the 7000? Now, for this the 7000 to happen, okay, the only and the primary condition is the 695x, continuous closings above 695x. Okay, hourly closings, 4 hourly closings, daily closings, continuous closings above the 695x, then only it will happen, otherwise it will not happen at all. Okay, this must happen. Now on Friday and then on Monday, okay, last week, it came into the condition wherein we were expecting, okay, the 7000, but it failed because we knew that it will fail at the 698x zone. Okay, then also on Tuesday also it was in a condition to sustain, but on Tuesday there came an hourly closing below the 695x, though it managed to recover and close above the 695x, but because it gave 1 hourly closing below the 695x, so it was clear for now 7000 will not happen. It will first come down or remain weak, and then only it will try for the 7000, and in that manner only we will see the 7000, otherwise not. Okay, this means that again continuous hourly closings, continuous 4 hourly closings, continuous daily closings must happen above the 695x. When that happens, then only it will come into the condition to test, to struggle, and then to sustain at the 698x zone. Okay, this is small zone in the 698x. Okay, because it's not like that it will just sustain and give closing above the 695x and then will hit the 7000 within a day. No, that will not happen in this manner. Why? Because 698x zone is there. Okay, so 698x zone will be tested, will be retested, struggle, and then only when it sustains, then only it will come into a condition to try for the 7000, but still the 7000 cannot be confirmed. Okay, why? Again, there must come at least a minimum of 2 daily closings above the 698x zone, then only the 7000 will be like 95% chances will be there that S&P 500 is going to hit the 7000. What if it breaches the 698x through a very heavy bullish move, hits the 7000? What will happen then? Then we will see the fall. Okay, so for a 7000 to happen, for a sustainable bullish movement in the 7000, 2 consecutive closings, daily closings must be seen above 698x zone, otherwise this will not happen at all. And even if it happens, then also there will be the fall. Okay, and remember, I mentioned earlier also, I mentioned that whenever it enters into the 7000, it's not like that in the 7000 it is going to sustain. No. When it enters into the 7000, okay, then in between 7000 and 7100, there is a very heavy zone, okay, that will trigger the fall. This zone is expected to be the expected all-time high as of now, expected all-time high. Okay, then there will be the fall for like around 10% or so, at least 9 to 10%. Then only there comes the recovery, then only it will move. Okay, and even before this zone, there is one more anticipated zone, okay, in between the 7000 and the 7050. Okay, there is one more zone, okay, that is also anticipated, but that is not expected to trigger 9-10% fall. This can trigger only 4%, 3 to 4% fall. Okay, like 200 to 200 300 points, okay, or so, that fall will be seen, okay, through the zone. So overall it's clear that S&P 500 will struggle and have to struggle a lot before actually it can try for the 7000, whereas the fall is good. Okay, fall is supported by the technicals, the numbers also, okay, they are supporting the fall. Only 1 or 2 these are key levels are there. Once these are breached, then the fall will be there to the 685x, okay, or even a little below. Okay, but the 685x is then further supported by the moving averages. We will expect a recovery from there. There is sorry, one more thing I forgot to mention here. If the S&P 500 fails to recover from the 685x, loses the 685x, trades below and closes below 685x, then 7,000 for now will not happen. Okay, S&P 500 will have to enter into the short-term bearish cycle. Okay, it has to come down into that time most likely it will enter into the 6,600 range, will do all of its activity in the 6,600 range, will recover from the 6,600 to then only to try for the 7,000. Okay, then that will be the condition. So as early as like Tuesday or Wednesday, okay, this will be very much clear how much chances are there if there will be a recovery from 685x, okay, or not, because this will be a trap. Because if it fails, and if it fails to recover from here, okay, then this will not create a buy opportunity. No, it will create a short opportunity, then you must further short, okay, not buy. But if it sustains in a manner that the conditions are supporting the bullishness, okay, then this will create a buy opportunity, buy, and then only it will try for the 7,000. But whatever will happen, I will keep you posted. I will keep you updated every day through these my daily precise updates. And if you have not yet joined my Patreon community, then I have given the link in the description of the video and also in the comment section. You can follow that link to join my Patreon community. So guys, hit like if you have liked this video in order to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you have any questions that you want to ask, then please feel free to ask your question through the comment section.